let's also take a look at what the European markets did, because European markets also all in the red on my screen. DAX down 1%, FTSE down 0.8%, CAC down almost 1% as well, and overall stock 600 also down a solid 1%. So we'll see how this pans out for us. With that, let's also talk about oil, because oil futures rose on Tuesday despite the stubborn inflation in the US that dragged the stock market lower. But what's key to notice, towards the end of the trading session, oil also began to fall. Now, when we talk about oil, we've got the WTI at $77.5 per barrel, Brent at $82.3 per barrel. Now, what's key to notice, WTI has seen a cut of 0.4%. Brent is also down 0.5% as we speak. Now, US crude and the global benchmark settled largely flat on Monday after rallying more than 6% last week as the Israel-Hamas war raged on, highlighting an ongoing risk to crude supplies if the conflict spreads further. Now, remember, the WTI has struggled to break out of a range of about $68 to $78 per barrel amid uncertainty over war in the Middle East and an unclear supply and demand outlook for the year. However, the WTI and Brent are both about 8.6 and 7.5% up respectively for the year, already into the year as well. Meanwhile, the Organization of Petroleum Exporting Countries, that's the OPEC, in its monthly report said that the demand is set to rise by 2.25 million barrels per day in 2024. Further, 1.85 million barrels per day coming in next year. So a relatively strong forecast banking on strong global growth, expecting a further upside in oil prices as well. Now, a further boost to economic growth could give additional tailwind to oil demand. Now, remember, OPEC's 2024 forecast is already higher than that of other forecasters such as the IEA. OPEC said a positive trend for economic growth was expected to extend into the first half of 2024. So amid, on one hand, you have the economics playing in on the demand and supply front. On the other hand, you have a whole host of geopolitical factors also coming into play. So, well, Shyansi, we'll see how both of these come together and pan out for the oil markets. Let's talk about the biggest global cue coming in this morning. And, well, that's the US inflation print for the month of January. A rather sticky print coming in at 3.1% on a yearly basis. This reading is above the market expectation of 2.9%. The pickup in inflation does not change the expectation for the month of December.
Absolutely, and the Indian government signed a formal request to join the International Energy Agency, IEA, and the accession process has now started. This is according to the head of the organization, Fatih Birol.
Let's talk about some intraday moves on Wall Street then, because Lyft shares soared in extended trading but pulled way back after the company's finance chief acknowledged on an earnings call that the press release included a major error. The stock soared more than 60% minutes after the earnings release hit, but shares still traded positive on company's upbeat outlook, particularly that it will be free cash flow positive this year for the first time ever on the back of cost cuts and rising ride demand.
And global electric vehicle sales jumped 69% in January from a year earlier, but were down 26% from December, reflecting subsidy cuts or tighter rules in Germany and France, as well as seasonally weaker sales in China. Sales of fully electric cars or battery electric vehicles and plug-in hybrids hit 1.1 million in January, up from 660,000 in January 2023.
Well, and after briefly surpassing Amazon market value yesterday, AI giant Nvidia was seen threatening Alphabet's market value, the third most valuable company on Wall Street. Nvidia's ascent reflects its dominance in the AI chip market, crucial for tech companies like Meta and others that are investing heavily in the AI integration.